Breaking news tonight, something huge may be brewing in the world of foreign currencies, and you need to hear this right now. Currency watchers are buzzing, investors are on edge, and whispers are spreading about a possible massive RV event that could shake the global currency market, the Iraqi dinar and the Vietnamese dong. Two currencies many have been holding for years, maybe closer than ever to a game-changing move. For years, talk of a revaluation has been dismissed by some as pure speculation, but the tone in the financial world is shifting fast. We're seeing patterns, we're seeing unusual activity, and we're hearing about updates behind the scenes that we simply can't ignore. If this plays out the way experts believe it could, the coming weeks and months might be unlike anything we've seen before in the foreign exchange world. Stay with us as we unpack exactly what's happening and why now may be different than ever before. For those who are new to this story, let's quickly explain what makes these currencies so unique. The Iraqi dinar has been undervalued for years, largely due to political instability, war, and a struggling economy. The Vietnamese dong, while more stable, has also been kept low to encourage exports and attract foreign investment. The idea behind the RV or revaluation is that once these countries' economies reach a point of stability and growth, their currencies will be adjusted upward to reflect their true economic strength. What's interesting is that both Iraq and Vietnam have been making major moves in 2025, moves that go beyond normal policy changes. We're talking about banking system overhauls, new international trade agreements, rising oil and export numbers, and most importantly, quiet but significant upgrades in currency exchange infrastructure. This combination of actions has set off alarm bells for seasoned currency analysts, who say they've never seen both nations moving in such a synchronized way before. Now, here's where things get especially intriguing. Banks in several regions have reportedly updated their systems to handle large volumes of transactions in both the dinar and dong. In the past, these kinds of system upgrades have often happened just before major currency shifts. We're not talking about minor tweaks here. These are costly, time-consuming changes that institutions don't make unless they expect a real reason to process far more trades than usual. In some cases, insiders say rate sheets have been adjusted to allow a wider range for these currencies. While no bank has publicly confirmed that a revaluation is imminent, the groundwork being laid suggests that big changes could happen quietly and quickly. That's exactly how other currency events in history have unfolded, with very little warning, catching many off guard, and rewarding only those who were watching closely and ready to act immediately. Iraq's side of this story is especially important right now. In recent months, the country has taken major steps toward modernizing its economy. The Central Bank of Iraq has aligned new regulations with international standards, a move that opens the door for greater foreign investment and smoother trade. Oil production, Iraq's main economic driver, has hit record highs not seen in decades, creating a stronger foundation for the dinar's stability. Additionally, the government has been actively working to digitize financial systems, making transactions faster and more transparent. This isn't just about catching up with the rest of the world. It's about positioning Iraq as a serious player in the global economy. When you combine these reforms with the growing stability in the region, you begin to see why so many believe the dinar is on the verge of a major upward move. On the other side of this potential RV event, Vietnam has been quietly becoming one of Asia's fastest growing economies. Over the past few years, global manufacturing has shifted heavily toward Vietnam as companies diversify supply chains. This has driven record-breaking GDP growth and consistent foreign investment inflows. Vietnam's government has been modernizing its banking sector, strengthening trade relationships, and building foreign currency reserves, all critical steps for supporting a stronger currency. The State Bank of Vietnam has also been allowing more flexibility in the dong's exchange rate, a sign that it's preparing for the currency to play a larger role in global markets. For many, these changes look like the prelude to a significant adjustment. The question isn't whether Vietnam is growing, That's already happening. It's whether the currency will soon reflect that growth in a big way. Historically, currency revaluations don't arrive with big announcements. They tend to be the result of a series of smaller, less publicized changes that build up over time. That's exactly what's happening right now in both Iraq and Vietnam. For example, international trade agreements are being renegotiated to account for stronger local currencies. Banking partnerships are expanding at an unusually rapid pace, and some of the world's largest currency exchange platforms have begun upgrading their systems in ways that specifically prepare for these two currencies. This is not the kind of activity you see when nothing is going to happen. This is the kind of preparation you see before a market shift. The smart money is paying attention, and so should you. One key factor driving the optimism is geopolitical stability. Iraq has managed to strengthen relationships with neighboring countries, opening up new trade routes, and creating more demand for its currency in international transactions. Meanwhile, Vietnam's strategic location has made it essential to many global supply chains, especially in technology and manufacturing. These positions not only increase economic resilience, but also create strong incentives for currency appreciation. Both nations are also increasing their participation in international financial forums, signaling that they're ready for deeper integration into the global currency system. This is a major shift from just a decade ago when neither country was in a position to make such bold economic moves. We've also seen unusual buying patterns in the market. Dealers who specialize in exotic currencies report that demand for both the dinar and dong has been spiking in recent weeks. Exchange houses and financial hubs are holding larger inventories of these notes than usual. Even professional traders, who normally focus on more traditional currencies, have started watching the Middle East and Southeast Asia more closely. This increased attention isn't random, it's part of a broader trend where emerging market currencies are gaining favor among investors seeking growth opportunities. With global markets facing uncertainty in traditional assets, the potential for a strong, well-timed RV event in these currencies becomes even more appealing. Another major sign to watch is the timing of upcoming international reviews. Both Iraq and Vietnam are due for significant assessments from organizations like the International Monetary Fund and the World Bank in the coming months. These reviews often influence currency policies, especially when they highlight improvements in financial stability, reserves, and governance. In past cases, countries that received positive evaluations from these institutions often moved quickly to make currency adjustments. For Iraq, ongoing infrastructure projects and oil revenue growth could help secure a favorable outlook. For Vietnam, record-breaking export numbers and a healthy trade surplus strengthen its position. While these reviews may seem routine, in reality, they can serve as a green light for governments and central banks to take bold steps. If both countries receive strong marks this year, it could set the stage for a coordinated move that catches many by surprise. A move that could define the RV event people have been waiting for. International banks are also sending signals through their actions. Several large financial institutions have expanded operations in both Iraq and Vietnam recently. These expansions aren't cheap. They involve hiring staff, upgrading systems, and committing to long-term leases. Banks make these investments only when they believe business volume is going to grow. Currency appreciation is one of the fastest ways to increase transaction activity, especially when it involves cross-border trade and investment. In some cases, these banks are also adding new currency pairs to their foreign exchange offerings, which is another clue that they expect increased demand for the dinar and dong. While no official has stepped forward to say, a revaluation is coming, the financial sector's behavior speaks volumes. Just like with past currency events in history, the quiet moves made by large institutions often reveal more than any public statement ever could. Technology is another piece of the puzzle we cannot ignore. Iraq and Vietnam have both been making massive investments in financial technology, from digital payment systems to blockchain-based transaction platforms. These upgrades aren't just about convenience. They're about making large-scale, high-value international transactions faster, more secure, and more transparent. This kind of modernization is critical if a currency is going to play a bigger role in global trade. In Iraq, mobile banking adoption has surged as younger generations demand modern financial tools. In Vietnam, e-commerce growth has created pressure for faster and more reliable payment processing. These changes lower the barriers for international investors and businesses, making it much easier to move money in and out of the country. For a potential RV event, having this infrastructure in place ensures that when the currency value changes, the market can handle the transition smoothly without chaos. One important thing to remember is that currency revaluations don't just impact traders. They can have massive effects on everyday citizens in the countries involved. A stronger currency can increase purchasing power, making imports cheaper and improving living standards. At the same time, it can affect export competitiveness, which is why governments tread carefully. Iraq and Vietnam both seem to be trying to strike the right balance, building their economies to handle a stronger currency without damaging key industries. For investors, this is encouraging because it shows that policymakers are thinking long-term. They're not just chasing short-term gains, they're preparing for sustainable growth. In the context of a possible huge RV event, this kind of preparation is exactly what gives it credibility. It means that when the adjustment happens, it's backed by real economic strength rather than hype. Market patterns also play a critical role in predicting major currency moves. Right now, many analysts are pointing out similarities between current conditions in Iraq and Vietnam and those seen before other major currency shifts in history. For example, before the Kuwaiti dinar returned to its pre-war value, there was a period of rapid banking reform, increased trade activity, and quiet but noticeable changes in exchange systems, all of which we're seeing now. Similarly, before the launch of the euro, several European currencies underwent smaller, staged adjustments leading up to the big change. The same up pattern appears to be unfolding again. While history never repeats exactly, it often rhymes, and for many experienced watchers, this rhyme is sounding very familiar. Another sign worth noting is the behavior of professional traders. While retail investors often focus on rumors, institutional traders rely on data and patterns. Over the past few months, more high-level traders have been adding Middle Eastern and Southeast Asian currency positions to their portfolios. This doesn't mean they're betting everything on an RV event, but it does show that they see potential upside. These traders have access to analytics and information most people don't. And when their activity lines up with other signals, it becomes much harder to dismiss the possibility of a significant shift. If the RV event happens, these early positions could deliver massive returns, which is exactly why they're moving now rather than waiting for an official announcement that may never come. For the everyday person holding dinar or dong, the key right now is awareness. You don't need to panic or make rash decisions, but you do need to pay attention to the signals we've discussed. This includes watching for sudden changes in exchange rates at major banks, increased coverage of Iraq or Vietnam in economic news, and any hints of policy changes from their central banks. Sometimes the smallest announcement, something as simple as a new banking regulation, can be the first domino that sets everything in motion. If you're already invested, staying informed is your best tool. If you're considering getting in, understanding the timing and risks is crucial. In the world of currency revaluations, those who prepare early are often the ones who benefit most. We also need to consider the broader global environment. The US dollar, euro, and other major reserve currencies have faced pressure in recent years from inflation, geopolitical tensions, and shifting trade patterns. This has led many investors to diversify into emerging market currencies, especially those backed by growing economies and valuable resources. Iraq's oil wealth and Vietnam's manufacturing powerhouse status make their currencies particularly attractive in this context. If the RV event happens during a time when traditional currencies are under strain, the impact could be even greater. It could shift billions in capital toward these emerging currencies almost overnight. This is why the timing feels so critical right now. The stars are aligning in ways that don't happen often. Of course, it's important to acknowledge that nothing in the currency markets is guaranteed. A huge RV event would be unprecedented in some ways, and there are still risks. Political instability, unexpected economic shocks, or global market disruptions could delay or even derail a revaluation. However, the sheer number of positive signals right now is hard to ignore. We're not looking at a single rumor or one-off event. We're looking at a consistent, multi-layered build-up that's been gaining strength for months. When so many independent factors point in the same direction, it's worth paying attention. The key is to balance optimism with caution, preparing for the opportunity without assuming it's a sure thing. As we close this special report, here's what you need to remember. The Iraqi dinar and Vietnamese dong are both showing signs of being in the final stages of preparation for something big. From banking reforms and technology upgrades to international reviews and unusual market activity, the list of indicators keeps growing. If an RV event happens, it could change the financial landscape for those holding these currencies. The next few months will be critical, not just for Iraq and Vietnam, but for the global currency market as a whole. Whether you're a longtime holder, a new investor, or simply curious, now is the time to stay alert, informed, and ready. We'll continue tracking every development and bringing you updates as they happen. Because if this RV event becomes reality, it could be one of the most significant currency stories of the decade, and you'll want to be ahead of it when it does.